Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, April 1st, and it's around 5:30 New York time. Obviously tomorrow, April 2nd, here in the US, President Trump will be releasing his tariff plan. That's supposed to be occurring at 4 p.m. Eastern. At least that's when the signing of all these things are going to be. Not sure when the news will come out, if it will come out midday, if it's just all going to be hit at 4 o'clock. So it really makes things very challenging as we go through some of this analysis tonight. Technical analysis, the way at least I think about it, it's supposed to incorporate and reflect, what the market is thinking about in terms of where, price is going to go and based off of all the information it has at hand. And so in theory, if we kind of go through this and these interpretations are right, maybe the technical analysis will give us the information we need without knowing the end result yet. And so this will be a good practice in theory. So at least when we look at what the expectations are for the data that's coming, ADP, we're looking for 115,000 jobs to have been created on Wednesday. On Thursday, we're going to get initial jobless claims. S&P Global Services, ISM Services, we're looking for 53 versus 53.5. Then on Friday, we're looking for 135,000 jobs to have been created, down from 151. Unemployment rate expected to remain unchanged at 4.1%. Average hourly earnings expected to remain unchanged at 0.3%. Average hourly earnings year over year expected to decline to 3.9% from 4%. And basically, when we just take a look at the market and look at some of these charts, what you're going to see is that the market is sort of positioned in a way where it really could break either way. Especially, it becomes very clear when you look at the euro and where the euro is currently, because the euro is basically sitting on this support level. And obviously, if this support were to break, it would be a major break of support, and it would really potentially result in a return to around this 105.80 region. The one thing that is worth pointing out is that the trend in momentum is clearly bullish and favoring the upside. Additionally, when we look at the Bollinger Band, it's right here below the support level, and so this may actually be telling us that there's really good support for the euro right in between this 107.5 area and this 107.80 area. And with momentum generally trending higher, it could be telling us that the next major move in the euro is going to be a continuation of the trend, which is higher towards this 109.5 region, with a breakout potentially sending us all the way up to around 111 or 112. When we look at the pound, it's also a very similar indication. We have this nice, rounding bottom on the RSI. Here was our low at 28.3. It corresponded with this low here. Here's our second low at 28.9. It corresponded with this low. So you're getting, you got lower lows but on price, but you got higher lows on the RSI. That to me is usually a pretty good example of what is a major change in trend. We obviously broke a major long-term downtrend. You can also look here and see that there's a major long-term uptrend that's now forming. And so this would suggest to me that we could really see the pound again begin to move higher again, perhaps once we get through all of this tariff news, depending upon how it plays out. Especially if it starts to look like it may impact growth here in the U.S. in a more negative fashion. Again, the pound looks fairly well supported with this Bollinger Band, with the trend line, and with support down here at 128. So in all likelihood, as long as we can hold the 128 region, you have to think that maybe the pound continues to move higher. When you look at the yen, it's also very similarly positioned. Here's our 20-day moving average. Here's our resistance area at 151.08. Also, here's your 10-day exponential moving average. So we're basically sitting again at a pretty key level of resistance, which may really limit the yen from going and weakening all that much past the 150.75 region. And we may really see the yen begin to move lower again towards 146. Additionally, you can see what looks like a bear flag that's formed, and that also would suggest that we continue to move lower. And you can see we've already broken out of that bear flag. When we look at gold, gold is obviously at this point reaching overbought conditions. RSI above 70, testing and moving above the upper Bollinger Band. Typically when this happens, we can expect to see a pullback, perhaps to 3,050 or another move sideways. This at least is what's been happening in the past. It happened here. We moved down a little bit. In this period of time when it happened, we just traded sideways for some time. Again, this looks like what we've seen in the past, and so we could expect to see another sort of consolidation phase over another couple of days. Maybe that sets up another move higher, although I would note we are starting to see signs that momentum is shifting. We're starting to see what would be called a bearish reversal. When you look at oil has clearly broken out. We basically held on to the 66 level despite numerous attempts. We've spoken about the importance of that 66 level now going back years. So it would look like at this point maybe oil is heading towards this 73 to 74 range over the coming days as we continue to see the momentum build positively. When you look at the DAX has what looks like maybe a rounding top in it. We tried to break support. That didn't really work so far, but we're going to keep an eye on it because clearly if the DAX is able to, break support and then undercut the low here and start making lower lows, it really kind of sets up a return to this 21,600 area. Additionally, you can make an argument and say that the DAX has formed a double top, and then you could even begin to say that maybe there's some sort of descending triangle that's beginning to form. That's also a bearish pattern, suggesting that the DAX moves lower. Additionally, you have momentum fading and moving to the downside. When we look at the FTSE, again, here's your little bit of a downtrend. Here you have a little bit of an uptrend. The FTSE looks like it's consolidating, getting ready for a major break. Here's your momentum also moving lower. And so that kind of leaves us with this idea as well that maybe suggests that the FTSE move back down to this 8470 region, which wouldn't really be surprising. Clearly, if we break this downtrend, we could easily move back up towards this 8800 region, maybe even towards 8900, which was the old highs. When we look at the Nasdaq, it's looking like there was a bear flag that formed and that was broken. And at least at this point, we've had 2 days where we've rallied back a little bit. It's not really unusual. We had a really big sharp decline last week. Additionally, when we look at the Nasdaq, at least on the weekly chart, we've been trading below the lower Bollinger Band for a couple of days. Today we came back above it, so that's worth pointing out. So there's some signs that maybe this is a little bit overextended to the downside. Although I will point out that when we look at the Nasdaq on a hourly chart, what really stands out to me, or at least when we look at it on a 15-minute chart, what stands out to me is what appears to be a megaphone pattern that's formed in the Nasdaq after the consolidation we've seen the last couple of days. I mean, typically when you see a rising megaphone like this, it kind of implies that the next major move is lower. But again, it's not really clear if it's completely played out at this point, but that's something that I would certainly keep an eye out for. Additionally, we broke the trend line, so it's not unusual to sometimes see a retest of this and perhaps move back up to 19,900 or so. But again, generally speaking, the U.S. markets have been trading a lot with the dollar. So if the dollar starts to really weaken, it's likely because the economic data, or it's not really in favor of what the Trump tariff team put in place. And that could really be more of a sign of global outflows. And that would obviously be bearish for U.S. equities. And it's really the same setup really for the S&P at this point. Here's your what looks like your megaphone pattern. And essentially, again, you can kind of make a case that this is also likely going to be breaking lower here. Because again, that's typically, what we would see. But again, we can't really rule out that you couldn't get some sort of retest or move back up to some of these higher areas around 5,700 over the next couple of days. Clearly, a break of this uptrend sets up a return to these lows at 5,500 or so. When we look at the Dow, again, the Dow has a very similar type of pattern in it, very similar look to it. So again, if this is kind of your classic, megaphone pattern with the flag on it, this would kind of also, imply that the next major move again is lower. So This is all obviously arbitrary because we have a lot of things going on that are not in our control. And so we'll just have to see how the news shakes out this week with the tariffs and then, of course, the economic data. So lots of moving parts. I think you just have to stay on top of the news and stay on top of your game. And I think more importantly for equities, it's following the flows, and that may just come through whatever the dollar is signaling. Anyway, hope you have a great rest of your week, and we'll see you next. Bye.